Hello everyone and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday the 20th of December. We've got a mixed outlook really moving through major markets this morning. Nothing too significant in terms of direction on Forex, a little bit of gains through equities, but nothing too significant. And I mean, for example, you've seen the DAX, which is performing fairly strongly. However, the CAC and the FTSE are basically flat on the day, and you can see the fact that S&P 500 closed again in all-time high territory yesterday. However, futures are basically flat, ticking a slight amount lower today. You had comments from Steve Mnuchin, the Treasury Secretary for the White House, yesterday, saying that they were very confident that the phase one trade agreement would be signed in January, and that sort of seemingly helped equities, or at least on Wall Street anyway, pushing higher. But it doesn't really seem as though that's maintained the momentum today. You can actually see that you've got a degree of safe haven bias today. And it's interesting actually that what we do at the moment see is that treasury yields are rising on the 10-year, a little bit less so on the 2-year. So subsequently, that is yield curve steepening on the spreads. I'll show you a chart here that just shows you that the correlation obviously is pretty high between bond yields moving higher, and certainly on the 10-year, and the S&P 500 moving higher, but just sort of beginning to lose a bit of traction. Maybe interesting to look at there. Now, in terms of how markets moving today, nothing really decisive, as I said, across Forex. Gold basically struggling around the 1480 mark again. And we're pretty much sort of drifting into the Christmas period now. You've got some data points that we have seen today. Initially, you'd argue that these data points are certainly UK positive data. GDP upward revision on Q3 to 0.4%. Also, pretty decent looking current account improvement in the current account deficit. And that has helped sterling to find a bit of support. I'll talk about the technical implications of that. Later on today, we've got the US GDP numbers for the final Q3 reading, 2.1% expected. You've also got core PCE numbers, and that's expected to show that 1.6. Where am I looking? Later here, 1.6 on the core PCE for November. There at at 3 o'clock, and Michigan Sentiment Final 99.2 is the where the prelim reading was. Okay, so let's have a look at my chart of the day, which is dollar Swiss. Now, what we've seen is the Swiss franc, which has been performing pretty strongly, and you can see that dragging dollar Swiss lower, and you can see through the last 6 or so months, dollar Swiss has basically been in a 350 pip range between 96.60 and just a shade above 100, which is parity. And breaking below the 98.40 pivot line, which was supportive through October and November, breaking below that in December, the market is now trending lower and rallies are being sold into. You can see that momentum indicators are confirming the breakdown, RSI into the mid-30s, where 40 was previously the basis of support, so confirming the breakdown, and that would suggest that any technical rallies on a near-term basis are a chance to sell. You've got the near-term breakdown of the support around 98 figure, which is overhead supply now, bit of resistance, and also coincides with the downtrend today. 98.40 obviously was that key level of old support, which is now new resistance, and you can see 98.40 here on the hourly chart, again becoming a basis of resistance since that breakdown. 98.20 also becoming overhead supply on a near-term basis. So we've got this little sell zone between 98 figure and 98.20 that is interesting to watch. Now, you've already seen a little bit of an unwind back towards 60 area on the hourly RSI, which has tended to limit the recovery areas on the hourly chart. Also, the MACD lines on the hourly back towards neutral. So this is sell zone territory. I think certainly if we started to see renewed sell signals coming on dollar Swiss, but certainly looks as though this trend is lower, and a retest of the lows at 96.60 to 97.10 seem to be on the cards. So with that in mind, I wish you good luck in your trading today. Click hit, and I will speak to you later.